This is the Friday, August 12th, 2016 version of the Market Plus segment. Joining us now is Don Rose. Don, welcome back.
Thank you, Mike.
Now, to get started here, we want you to kind of gaze into your crystal ball. Our buddy Phil from Ontario, Canada, has a couple questions, points, pretty open-ended. He's asking, the U.S. is importing wheat from France. We're exporting ethanol to Brazil. Both of those things were once unthinkable. What's next? How are things changing globally in agriculture?
Well, it is a global market, and I think the one thing you have to make sure, and I think there's some things that you have to watch. One, you want to make sure you keep your balance of trade, pretty close to equal. But I think when you look at it overall, it just tells us how competitive the world market is and U.S. producer. And I think we're going to have to be the low-cost producer. I think we can do that. And I think if you're the low-cost producer, you'll eventually gain market share, not lose market share. So I think that's the big focus, and I think that's the goal of the whole industry, no matter what industry it is.
You bet. You bet. You need to compete on that global stage. Phil's next question builds right on that. He's saying, with the Brazilian real appreciating, will this affect their planting decisions this fall?
Well, I think when you look at it actually from a Brazil standpoint, it looks like, of course, they had a short crop this year, both soybeans and corn, more so on corn. They're really struggling here with their feed, maybe even import GMO corn from the U.S. We'll see. But I think when you look at next year, it looks like what's going to happen is with the real where it is, with their inputs where they're at, we're selling in the dollar around the world on their grains, that you're going to see their soybean acres go up probably 3 to 4%. So probably at the expense of some corn. But so I think that's going to be the real issue, and that's going to be the competition.
Now, if their acres increased 3 or 4%, this last year they were roughly comparable to U.S. soybean acreage, right? Mid 80 million some acres.
That's exactly right. And I tell you, but if you look at Brazil and Argentina combined, they're raising about 1 3/4 times the beans that we are right now. So just a lot of beans down there. The Argentinians, with the export tax being taken off on corn, they're probably going to plant more corn than soybeans. So I think it leaves South America as as Brazil as a big producer of soybeans. And that's why, from a U.S. standpoint, for a producer, you have to be aware that starting late January, February, you're going to have a lot of competition again, and then we're going to have to figure out in the U.S. how to come up with less acres, on soybeans versus corn. And right now, it looks like maybe people will plant soybeans versus corn. So we'll see after the big acres last year on corn.
Or perhaps if we take a look at, again, the reports, Friday's reports, we saw incredible USDA actually input pretty incredible soybean demand. Whereas if they hadn't added 100 million bushels to the overall production, we would actually be, what, low 200 million bushel carryout if the crop comes in at 47 some bushel per acre?
Well, exactly. And I think that was the issue with soybeans, why they came back on Friday so strong, is because you look at it, we have a 330 million bushel carryout, but first you have to believe their demand side on new crop. Old crop's pretty much in cement. But if you take a bushel off, you take a 330 million carryout down to 250. If you take a bushel and a half off, you can go under 200 million. So that's why it's still a little bit dicey on soybeans. I know the government has a big yield out here, but we don't have it in the bin yet either, Mike.
Right. And demand has been strong. I mean, we continue, as you mentioned on the program, Chinese buying has been there for us.
Yeah, Chinese, so far it's been there, but that demand is going to be front-loaded, really like we haven't seen for a long time on corn and soybeans, and then it's probably going to really drop off fast unless South America has a weather problem. It is a mild La Nina starting, so that means that northern Argentina, southern Brazil could have some weather issues.
Okay, now you've mentioned quite a bit that shift from the favorable conditions for U.S. producers now until roughly January, when the market really starts to look at Brazilian production. As we're getting close to harvest, as we're looking at these lines of credits, they're going to need to be paid off. Making decisions, what should I be weighing with my crop in the field before the combine rolls out?
Well, I think when you look at it from a producer standpoint, the market's telling you, giving you clear signals. It's telling you with the inversions, November beans trading 15 cents higher than November, that you should sell soybeans and corn. If you want, on soybeans, if you want to re-own it, go out to July, buy some insurance, some calls or some called calls, give yourself some upside potential in case we have weather problems again, either in South America or here. On corn, it's just the opposite. You've got a carry of 24 cents from Dece to July, 7 months. That gives you about 3.5 cents a month storage. So take advantage of that. That's what the market's telling you to do. Store corn, but get some protection on it so you just don't let the price erode. Because remember, on corn in a continuation market, September corn's $3.12. If things don't straighten out, next July we'll try to go down to the same price if we don't improve. So that's the problem with a big carry market.
So we've talked quite a bit about selling that carry. If I'm a producer, I've got bins on my farm, I am going to try to capture that carry. What's the most effective way to do it, that July carry in the corn market?
Well, if you're satisfied with it, what you really should do is just plain sell the futures or hedge to arrive out in July. And then if you want upside potential, go out to July and buy some calls, buy some insurance to go back up again if you're not satisfied with the price. But that way it locks in your carry, because if you just look at the carry and don't do anything about it, the price erodes and you say, well, I still have the carry, but a lot lower price. So that's what you're really trying to do.
All right. Next question to you from former farm boy in central Iowa at rural mid-Iowa on Twitter. He's asking, have we seen the low in December corn? We kind of danced around that on the program. Is the low in?
You know, historically, you would say not. Historically, what you do is you put the lows in corn in a big crop year. And I think you have to say, regardless, this is a big crop year. I mean, it may not be as massive as the government thinks, but you still have to prove that you can put the crop away, store it, pull it away from the market. So typically, that usually takes till the middle of November before you really get all the stuff tucked away. So I would say it's probably a low bet. Usually, you put your, your lows in earlier in a short crop year. So I would say probably not.
All right. Cindy R. Kramer from Dighton, Kansas, is asking about basis contracts. She's heard them recommended several times, lock in that basis, but hers is 54 under. When you talk about a lot of Kansas, Nebraska, Oklahoma, places that had massive winter wheat harvests, basis is soft. How do you handle marketing in that part of the world?
Well, and that's exactly the problem. And, you know, we're talking about the South, but that's the same thing that could happen as you go north. You get closer to harvest. There they had to compete with the wheat for storage. We might have to compete with the old crop supplies for storage. So I think what you look at is take advantage of what you have. If it's going to cost to carry it and you can't beat the storage and you can't beat the carry in the futures market, I think you're better off to just plain sell it regardless and then just re-own it on paper.
Okay. Now, Don, before we let you go, we like to get our analysts to answer questions about phrases that get used a lot in the futures market. We've got two questions for you. First one, what is contango when used in the market context?
Well, contango is, when you go to work and buy a put and buy a call, so you catch both ends of a market moving up and down.
Okay. Secondly, why are U.S. commodities measured in bushels and foreign commodities are measured in metric tons?
Well, and that's a good question because a lot of the world is in metric tons and the U.S. is in bushels. We've always been in bushels. So, but when we take our bushels, a lot of times we convert them in a world market back to metric tons. So it's really just a U.S. issue. When you trade on a global market, you're really usually trading in metric tons.
Why doesn't the USDA, on their USDA reports, convert the other country's productions into bushels so we can understand it without a calculator?
And that's a good question. And the foreign countries would ask you the other way. Why don't they convert backwards? So, it's probably one of those situations, I guess, where the U.S. government, we're going to report the way we look at them. All
right. Well, Don Rose, thank you so much for joining us today.
Thank you, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. We do appreciate all of them. Continue to do it, and we will continue to get expert analysis right to you.